Good morning and welcome to the trade setup right here on BloombergQuint Live. I'm Yasha. Sorry, there's so much of information that is last minute. But anyways, we'll try and get you as much as I can. First, the world markets, and it was a flattish day. Yes, you could argue that they retreated or inched towards another record, etc. But it was a very flat day for the US markets. And I think the futures, whatever little I read, indicate that it's a flattish performance out there as well. So keep that in the back of your mind. The interesting thing is, and I don't quite know how much do treasury yields uh, obey technicals, if you will, but there's this chart which should worry us, maybe, if you will. But there's this chart which shows how the US Treasury yields are now trading above a key moving average, and if indeed the yields were to spike higher, then that could be interesting. Now, as the chart itself shows, that it's not necessarily that those averages have always been behaved, but yeah, it has retreated from those averages in the past in December, and now it'll be interesting to see if it, now that it's crossed, does it actually show a big perk up? The argument is certainly there, right? I mean, the US inflation is running red hot, so the argument is certainly there that the yields could inch up higher, but we all know for various reasons why the yields have actually stayed lower. So that's a topic for another day. I really can't get into that. But yeah, so for all of you who are interested, it's a great read. And there are multiple sources out there which speak about why yields are persistently low despite the fact that inflation is running red hot. You can go and read about it. Asia and SGX Nifty, I would reckon, would be suggesting a flattish to a soft start, maybe marginally in the green in certain instances, marginally in the red in certain instances. We had a bit of some bit of pressure coming into our markets in the second half of trade yesterday as well. So it's interesting to see what the SGX Nifty is indicating, but really, that's only as far as the start goes, if at all. It won't quite give you a correct picture of what might do during the course of the day, but yeah, could start off flattish. Just a quick snapshot as to what happened in trade yesterday on the MOV function before we moved the trade setup. And then remember, the advanced decline ratio was pretty, how do I say, terrible the day before. It's kind of been okay in trade yesterday. A bunch of news-making stocks had a really good move. Bunch of IPOs had a good move. Sugar came back in the reckoning with a bang yesterday, and we were talking about it. Remember, but Lamborghini was up about 5% yesterday. The losers, a couple of news-based losers, etc., but really not big corrections that we saw. Just that cement continues to grind lower on every passing day, as does steel. So that's something you want to keep an eye out for. Commodity stocks aren't exactly setting the stage on fire. Now, what's the trade setup for the day? So I think, I mean, frankly, just volatility would be the hallmark of today. It's expiry day. And remember, so many people told me that, and I guess most of you would know this as well. I mean, annual positions, some fairly long-dated positions, not necessarily that these guys leave everything on expiry day. Stuff is done well before expiry day, but because it is the annual, monthly, as well as the weekly expiry all together, you might expect some bit of volatility today. BFSI as a space continues to look very, very sluggish. And even large private banks are not necessarily showing any major buying. So yes, HDFC Bank, its gain market share in the credit card business for the first time in 13 months. Could that show some traction now from here? Yes, it could. But for anybody who bought into HDFC Bank at 1600, 1650, thinking dips will be bought into, or at 1550, thinking that it's a dip from the 1600, 1650 levels, imagine what happened to that purchase. If it's leverage, even more so. So, BFSI is looking very, very sluggish. And I think there's a wonderful story. I mean, as a good data back story on BloombergQuint.com about how car and passenger vehicle are gaining traction, but two-wheeler sales are still hurting. So Bajaj Auto may have given a bit of a flare yesterday because it's finally come to the party when it comes to EVs, but the sales per se are still hurting. Actually, which is also why viewers, battery makers, which are two-wheeler suppliers, also or two-wheeler auto component suppliers, are just not able to find some traction because the end market is not good. For such a long time, in the last 2 months or 3 months, everybody's talking about buying auto ancillaries, and Hero Motocorp is such a great and it is, by the way, it's a great dividend yield stock, and at some point of time it will do well. But if you are trading leverage, you've got to be careful about it. That's the limited point I'm making. Otherwise, from an investment perspective, who knows? Some of these might be the best performing stocks of 2022. And I'm not I'm not chiding. Some of these could well turn out to be that, but just be careful when you're trading it. You need to know your basics and your fundamentals really well if you're indeed trying to invest or trade in them. What about stocks to watch in the session today? It's a long list. I've chosen a few which I thought were important, so let's bring them out. One, NMDC. The Goa cabinet has approved a policy to permit the export of iron ore dumps, which is the waste, and the move apparently, some people believe, will allow resumption of mining activity in the next 4 to 5 years. It's a long drawn thing. Who knows whether it will happen or no, in which shape or form, whether it happens in 3 years, 5 years, 7. I have no idea, but NMDC could move, so I'm bringing this out here. Delta Corp could move. Omicron threats out there. For the last few days, we've been talking about how PVR, Inox, etc., the reopening place people should be careful of. Now, Delta Corp, because the Goa government does say that casinos will operate at 50% capacity. This is peak season, unfortunately for Delta Corp, but possibly the right move. That there is stuff to be kept in mind. So watch out. Goa back decision on both Delta Corp as well as NMDC. And viewers, just be careful. I would suspect that if you're trying to trade NMDC, please be careful. It may start off with a bit of a flare. Fundamentally, it may not make too much of a difference. So don't go out and buy an NMDC at a much higher level. And be wary about you trading Delta Corp as well. I think the stock has corrected a little bit. So the news are important. So I'm bringing it to you, but be careful. The other thing that everybody needs to be careful about is this whole flare up in IPOs. And there's some interesting data that I have, by the way. So the stocks did really well, right? Supriya Life, Data Patterns, MapMy India, HP Adhesives, big bang day yesterday for some of these IPOs. We'll get that graphic up. But here's the thing. The delivery volumes and the percentages on the National Stock Exchange were very, very poor. So Supriya Life took 29 lakh shares traded, uh, 29.4 lakh shares delivery versus volumes of 1.92 crore shares. That's quite stark, right? This data is from my friend who runs an outfit called Omkara Capital, but I'm just bringing it to you. So 29.4 lakh shares versus volumes of 1.92 crore shares. MapMy India, 5.1 lakh shares marked for delivery versus volumes of 42.5 lakh shares. So no genuine buying. Data Patterns, 7.7 lakh shares delivery versus volumes of 54 lakh shares. So certainly some of these were very, very active, but did they have fairly high delivery percentages? No. So keep that at the back of your mind. The other thing is this whole story around banks gross NPAs, and Ida has written a wonderful piece on it, by the way, on our website. You might want to go in and read that. And banks gross NPAs, this is the statement, right? That the headline is this: that the bank's gross NPAs may jump about 8.2, 8.1 to 9.5% by September 2022, from 6.9% in September 2021. This is as per the RBI. But the internals are interesting. Saying that the public sector bank's gross NPA ratio may rise from 8.8% to 10.5%. Private banks, 4.6 to 5.2, and this is the aggregate of private banks. So the bank in your portfolio, that NPA may not necessarily rise. More importantly, saying that banks have sufficient capital both at aggregate and individual levels, even under stress conditions, to meet these issues. So just keep that in mind. I mean, the statement need not evoke too much of panic and fear. That's the point that I was trying to make. Yeah, this is the piece that I was talking about, written by Ida. So try and see if you find some time to read it. It'll give you a good idea about what's kind of happening there. By the way, so just before we move on to the next piece, keep in mind the Macquarie note on banks also suggests that October and November had good festive season, and third quarter should see healthy asset quality performance for banks. But because of the impending threat of Omicron, there could be a possibility that banks could have a difficult Q4. So, and which is why, viewers, I think BFSI is sluggish, which is why there are no large takers for banks and FIs, because you just don't know which shape or form will it be going ahead. Be careful. That's the limit point I'm making. I'm not suggesting whether you should buy or sell. That's your own decision. There's a note, a brokerage note from Investec on Bombay Stock Exchange. The stock has had a mammoth run. Now, this note downgrades BSE to a sell with a target price of 1720. It's saying that it expects a sequential decline in earnings in FY23 and says that the stock trades at a significant premium to global peers and market leaders, and therefore the stock from a current 1920, 1930 odd rupees should come off to about 1720 or thereabouts. 1953, excuse me, I stand corrected, 20 rupees. But yeah, they believe that the stock should come down, and their target price is 1720. Interesting piece. If indeed there is a sequential decline, then certainly the case for a bit of a multiple derating is in order. In fact, both BSE and NSE trades in the private markets at 3,500 or thereabouts. So you could argue that touch expensive. BSE certainly very expensive from the looks of it. It's not a market leader. That's the limited point. And viewers, last but not the least, to watch out for Indigo today. It's an interesting stock. Remember, today is the EGM, and it's important because they've called this to amend the share clauses, and the removal of the clause could allow either side to sell or transfer shares to a third entity without giving each other notice. I think that's the long and short of this. So it's a very important EGM. The outcome could well have an impact on the stock price movement, either way, so to say. And if we believe that the Omicron threat is alive and kicking, it could have a near-term negative impact on Indigo as well because of flight cancellations, if you will, though India is touchwood safe right now. And it could also prove a buying opportunity because Omicron, if indeed becomes it leads to mass infections and therefore herd immunity, what you will, various theories floating out there, then it could prove to be a blessing in disguise for people who want to buy stocks like Indigo at lower levels. So do watch out for each of these as well. There are some various other newsmakers, by the way. NTPC is looking for some strategic investors in the clean energy arm, or BPCL, wherein there is some newspaper report about how divestment is being delayed to the next fiscal. Maybe some of these stocks react as well. But yeah, so lots of stocks to watch out for in the session today, and which is why I've not even included the key movers in the mid cap end of the market today. Anyways, we've done 30 minutes of the trade setup. Just stay safe, if you will, and watch out for banks. They don't seem to be all that great, and real estate, and to an extent, I think some of these reopening plays, you got to be careful on some of those as well. Thanks so much for tuning in. Stay safe.